here another beautiful Sunday afternoon, morning, depending on where you are watching from. And today we're going to talk about the big topic, really diving into. Everyone's got this fear of the market. We're going to spend some time really diving into that to get a better understanding of what all that really looks like, how much of it is real, how much of it is emotions, how much of it is based on actual fundamentals. We'll break that down because really the past 2-3 weeks have been a bit chaotic in the markets. And I know we always talk about you shouldn't be logging in every day, you shouldn't be looking every single day, but it's hard to ignore the news sometimes. And I genuinely and truly understand that can be the tricky part. And that's where I want you we're going to just do a level set, really in a way to kind of help make some sense of all of this. But thankfully you're watching. If you're watching this live, it's a beautiful Sunday, a hot Sunday afternoon for November, a week before Thanksgiving. We won't have a show next week because it'll be right after Thanksgiving. I've got the whole family in town. I'll share more of that at the end, so we'll skip a week of this as well. But I want to share with you, and be sure to say hey in the comments if you're out there watching as well. Please be sure to check in so I can give you a shout out as well. Let's talk about kind of where we are at economically, what it means for your pocketbook, what it means for your groceries, what it means for all of these things. Like these are the different factors that you need to be thinking on. You know, today's topic is about the fear that's occurring in the markets right now. And there is no way to deny it. There is certainly fear in the markets. And unfortunately, I'll say this a few times throughout this live stream, the market, when I say the market, I'm talking the stock market, but the economic machine itself, whether it's stocks, bonds, crypto, whatever it is, it really trades on two things: fundamentals and emotions. The stock market in particular. And unfortunately, I wish it traded more just on the fundamentals. By fundamentals, I mean, is this a financially viable business? Is this a good business? Is this an investable business? Is this a profitable business? I wish the market was 80% fundamentals, but it's not. I'd argue it's the other way around. It's oftentimes emotion. And you have these fears that are brewing of an AI bubble. And I think we've spoken about that and debunked that. If you really follow the markets, you saw NVIDIA, who is, as of this moment, even more so now, the most valuable company in the world, NVIDIA, the chip maker, because of the AI boom. If you're a 90s kid like me, you probably dreamed of having an NVIDIA graphics card so you could play Flight Simulator or some Counter-Strike or some game, right? NVIDIA was like the graphics card to have in the 90s. Who were my 90s kids that were wanting to go to Office Depot or Staples to get an NVIDIA card? I'm sure that there's others that can relate to that out there. But anyways, NVIDIA came out and posted greater profitability than expected, greater earnings than expected, all things that should have made the market go up. And it did till about lunchtime. And then the bears, the naysayers started, the emotion came back into this. And well, NVIDIA only had a great quarter because they're fueling the AI bubble. Jensen Huang said, listen, if I delivered the CEO, he said, if I deliver a great quarter, they say I'm fueling bubble speculation. If I delivered even close to a mediocre quarter of earnings fundamentals, they would have said the bubble's right here or the bubble's here. Like he literally said, I'm in this no-win situation. So you look at this and think, God, what is really happening? The problem is, and Warren Buffett says it so well. I know some of you are just hopping on here. Hey, we're live, by the way, so say hi in the comments. We're talking about the fear that's in the market right now. And if you get nothing out of this, those of you who just jumped on, Warren Buffett, who is the OG investor, right? From that standpoint, everybody knows and respects. I'm talking Warren Buffett, not Jimmy Buffett, right? Hey, Hunter, great to see you too. Warren Buffett, not Jimmy Buffett, who passed away, who was a pilot, by the way. Warren Buffett said, to be fearful when others are greedy and greedy when others are fearful. Let me say that again so that really hits for some of us here. Right now, I would argue the market is being fearful. Be greedy, he says, when others are fearful, and fearful when others are greedy. Well, I just checked this morning. They gauge the market sentiment from 0 to 15, 15 being extreme fear, 0 being no fear. As of this morning, we are at 15, and we've been at 15 for about the past 14 days of extreme fear in the markets. So if we believe the philosophy of Warren Buffett, who's done quite well for himself and for many others and many foundations that he gives to be greedy when others are fearful, that suggests there are some deals out there. And let me tell you, there are some deals out there. In fact, many of you, hey Tyler, actually Tyler and I were just talking about this today, one of the deals. Tyler and I were just talking about Bitcoin. Literally, I feel like on Friday, or maybe it was over the weekend, I can't remember. If we believe to be greedy when others are fearful, Bitcoin is a great example of that right now. Do you know what's really driving down the price of Bitcoin right now? It's really two things. You had, number one, a lot of people buy Bitcoin on margin. What does that mean? It means they used leverage, or in plain English, they used debt to buy Bitcoin. And that was fine, and they could continue to service that debt as long as Bitcoin stayed above a certain level. That was great. But with this big drop, it forces the sell. It automatically closes the position because they bought with leverage. And as you can imagine, normal people are not buying Bitcoin on leverage. I'm talking millions of dollars. Like, you just don't go out and say, I'm gonna buy 10 grand of Bitcoin on leverage. Like, that's too small of potatoes for people to do. I'm talking millions of dollars. So you have these positions closing, and it becomes these vicious cycles. As a multi-million-dollar position closes, what does that do to the price of Bitcoin? It drives it down further. So the next guy in line gets close, right? And it continues on. On top of that, and those of you watching that watch the crypto markets, and Tyler, do me a favor and tell Xander this too, because he's the prime demographic that's getting marketed to this right now. You'll see people leaving Bitcoin and going to Zcash right now. Let me tell you something. I hate to speak negatively against someone's project, and Zcash is a project, and the cause is good and everything else. Their marketing is like Bitcoin but private. And I respect that and I understand that. But its price is way inflated because these people who are getting burned on Bitcoin or whatever are leaving that and going to that. They're taking their money from here and they're moving it there. And that's what's driving up the price of Zcash. By the way, Zcash is doing a ton of marketing right now on this messaging. That ship will run out. In fact, those of you, I'm going to be so bold as to say, those of you that buy Zcash, which is a cryptocurrency, that are buying Zcash now are just providing liquidity for someone else's exit, who's going to exit very soon because they've done very well on it. And Tyler, the reason I bring you up is they're marketing towards like Xander's demographic, right? Like that, 25-year-old, 30-year-old, kind of okay with crypto. They're marketing it as the private Bitcoin, which it has some advantages, but Bitcoin itself in its nature, in a decentralized nature, is private. If it wasn't so, we would know the name of the creator of Bitcoin. But we don't know that because it's decentralized and private. Now we know his wallet address and we know what's in there, but that is the beauty of a public blockchain ledger, and that's the thing that allowed Bitcoin to do so well. So enough about that. the premise I want to stick on is be greedy when others are fearful and fearful when others are greedy. And right now, the fear index is 15 out of 15. It's the highest I've seen in a long time. People are very fearful of this possible AI bubble. There are people that are fearful of cryptocurrency right now. That's why they're piling into like a Zcash and these sort of things, Tyler. So thanks for telling them about that. You really have to search for the opportunities. Now, there may be some of you here saying, hey, listen, I don't know. I don't know if I might believe there's an AI bubble. Maybe you're a little bit worried about technology. I'm going to send an email out this week on some great non-tech stocks that have more room to run. One of them I was just looking at this weekend, silly enough, whether you believe in it or not, is Coca-Cola. That'll be one of them on the list. I'll just tell you now. The Moolah meter, for most of you, will have it as a watch or a buy. I don't think it's a strong buy yet. That's why I think it has more room to run. 2% dividend, et cetera, et cetera. We personally don't drink Coca-Cola. We're like health nuts and such, but clearly a lot of people do. And there's other products than just Coca-Cola, right? There, Costa Coffee, like Coke owns Vitamin Water. Like there's a lot of other brands in there that Coca-Cola owns. And I'm going to be recommending, because while I am all in on technology, I am all in on crypto. In fact, I'm buying up more crypto this weekend. I was buying up more tech stocks on Friday. I still believe there's an opportunity to have some diversification in some of these staples. Whether there's a recession or not, tell people to stop drinking their Coca-Cola, right? It's a hard thing to do. Last little recession, when we were still doing our previous business, our aviation business, I was thinking the same way. What are things, if we went through a downturn, people are going to buy no matter what? And one of those was chicken. And we were big into Tyson chicken. That's not a Tyson chicken now recommendation. I believe that's maybe run its course, and they've had some leadership issues, we'll call it, over there recently. But this is kind of how you have to be thinking sometimes. And we will help you do that thinking. But even more importantly, I'm tracking every day what Sophia is purchasing. And Sophia stands for Savings, Optimization, and Personalized Help for Investing Advice. If you have not activated Sophia yet, please do so. It is your personalized investor on autopilot. Some of you may look at Sophia this week and go, wow, Sophia's down $100 this week, or a few $100s this week. And that's okay. Mine is too, by the way, because I was looking at what Sophia was purchasing this week, and for the majority of it, it was IBIT, which is the Bitcoin ETF, because it has just been beat up. So Sophia is constantly looking at your moolah meter, your risk tolerances, your goals, everything else, and not for the people who say no to risk. She wasn't doing that. But for those of you that are okay with a little bit of risk, I was watching the moves, this algorithm, which is Sophia was making, and there was some Bitcoin in there. You know, another one that's really getting beat up, it's not a buy yet, but maybe one, Tyler and others, to add to the watch list, is Oracle. Oracle, which is a great AI play, has been getting the snot beat out of it lately. But here is the thing everybody is missing. This like went totally under the radar. We are forgetting that Oracle was the majority capital put up for the US purchase of TikTok. But it got totally brushed under the rug. Remember the deal? Remember we had to come up with a buyer to buy 50% of TikTok. So 50% of TikTok was US controlled, so TikTok could continue to operate. The majority, there was a group of people, but the largest on the capitalization table of that deal was Larry Ellison via Oracle. So please don't forget, when you think of Oracle as just compute, AI, data, chip, this sort of stuff, it is all of those things. And it is an AI play. It's a really beat up AI play because of what's happened with this idea of an AI bubble, whether that's real or fake. But don't forget it's got a trick up its sleeve. Look, and you know who's in the same camp as Meta? Listen, Meta is beat up because Mark Zuckerberg is spending a ton of money on his Meta Labs, billions of dollars, and nothing to show for it yet. But something could come from that. And in the meantime, Meta is printing money on the advertising. You forget how lucrative these pay-per-click, all those ads you see on TikTok, on Facebook, on Instagram, on YouTube for that matter, are paid for by advertisers. Moolah does a lot of it. And it is lucrative for these businesses. Don't forget, like these are, do I worry about the businesses that are strictly an AI play? A one trick, one revenue stream kind of thing? There's risk to that. But some of these others, these Google, the Meta, the Oracles of the world, they're a multi-trick pony and they have an opportunity. So I want you thinking about that. I want you thinking the market is fearful right now, which really means there is opportunity out there for you. Are you going to take action on it? That is the level I want you thinking at. There is blood in the water, right? There's an opportunity with all of that. This is how the capital markets work. This is how crypto works. This is how the stock market, even bonds to some extent, this is how it all works. There are opportunities out there. Now, whether you're confident to take them, that's great. If not, I hope you'll use something like Sophia and let Sophia take those opportunities for you as well. But I really want this to stick with you, what Warren Buffett said. Be greedy when others are fearful, and fearful when others are greedy. And there's going to come a time where there's going to be a lot of greed again. And usually a time of a lot of greed leads to a time like we're in right now, a lot of fear. And we probably just came out of a greed cycle on the AI front and everything else. That's what people are calling this a bubble and et cetera, et cetera. You have to watch emotion. I wish the whole market just traded strictly on fundamentals. Is this a good company or not? Is it a profitable company or not? But it doesn't work that way. In fact, I'd argue that's only 20% of what drives prices, stock prices, crypto prices, et cetera. Unfortunately, a lot of it, 80% of it is emotion. And to that point as well, to the crypto, and I shared this 2 weeks ago, please remember, when you're buying a cryptocurrency, you're really buying a technology behind it, with the exception of meme coins. I don't do meme coins. I don't think there is a financial, yes, there is a financial market. I don't think there's financial longevity for them. But if you look at a Bitcoin, which is SHA-256, is the algorithmic cryptography that essentially runs it, there's a technology behind it. You look at Cardano, there's a technology behind it. You look at Ethereum. Ethereum, very quietly, was approved by the SEC for the tokenization of real world assets, which I believe is like a very still out there idea, 9 to 12 months away till we really start to see it. But that'll be done on the Ethereum network. There is a utility beyond a token. That's why they call them utility tokens in some cases. You need to be thinking about the fundamental business or technology or patents that underlie all of this stuff and get out of the emotion. Just because everyone's piling into Zcash right now doesn't mean you should. In fact, I think you should strongly avoid things like that. I think Zcash is purely traded on hype and good vibes right now. And that is not sustainable, just to be clear. I think the money that's leaving Bitcoin is going over there and it's going to be hurt twice. It was hurt because they probably sold their Bitcoin at a loss and they're hopping in Zcash and they're going to hop out of that at a loss as well and get hurt. But unfortunately, that is how the markets work. Fear, greed, emotion play such a big role in all of this. So I'll leave you with this. When others are fearful, there is opportunity out there. That doesn't mean you need to get fearful. That certainly doesn't mean go sell, because you know what happens when you sell, when you're fearful like this? You lock in the losses rather than being patient and waiting this thing out. I've learned that mistake the hard way before. Stay the course. Put one foot in front of the other. In fact, if you have the blessing to go put in more cash to lower your cost basis or your average cost per share, as we show you in Moolah, this is the time to do that. Please go do that. Listen, have a blessed, abundant, outstanding rest of your Sunday. Enjoy your Thanksgiving as well. We will not be live next Sunday. I'll be spending time, got the whole family coming to the house, so I'll be spending time with them. But I'll be back live the following Sunday. I'll send you some great emails this week, some of those non-tech stocks we're watching, some great Moolah updates. Don't forget those that maintain a balance above $1,000 in Moolah, get the Moolah Happy Mug. I'll send you emails on that too so you can be seeing that. But listen, have an abundant rest of your day, everybody. I'll see you.